Good morning, everybody. How are you? Brand new Monday here, brand new week, exciting. I actually love Mondays, one of my favorite days. I'm ready to come back to work after a weekend, tell you the truth. So, what is this? This is February 7th, 2022. I want to welcome everybody here. Thank you very, very much. So, Piton's in the news today. What rumor is it that Amazon and Nike, I guess, are courting, or maybe Piton's trying to court them. I don't know, but looks like it's popping up here. Right now, it's looking like a pretty good chart. Tell you the truth, for the long side. Sure glad I took my profits on Friday. Sometimes luck plays a part, no doubt about it. Okay, let's look at the market real quick. We'll take a look at some charts here. So I've got a lot of little jibber jabber on the charts today. You can see that we're opening up a little bit positive for the day, or for the morning anyway. You can see that we have a pretty nice chart pattern, to tell you the truth. A little bottom in here. Rally up, a little bit of a pullback, higher low. Certainly it seems like it's a higher low, and it was so far anyway. And you know what we would be looking for is that continuation up like this, with probably some little pullbacks along the way. I wrote right here, not much edge in this area, and I don't care how bullish it is here. I really don't believe we have a big edge on the market right through here. And the problem that I see is everything's going hunky-dory, and we're trading like mad fools. Bulls are stepping in, everything's looking great, and we're right up in here to resistance again, and they just the market turns down, and if we're not right on timing, then all our hard work is just pulled out from our hands. So timing is important. A stock picker's market, by the way, a stock picker's market is every single day you're in the market. It's not just this week of the year or that month of the year or this day in the year. It's every single day. It's a stock picker's market. And that's what we do. As swing traders, we look for we try to perfect as much as we can stock picking. And we also try to perfect timing. We use candlestick signals, which is nothing more than price action, but you can call it price action if it makes it feel better to call it candlestick signals. They're the same thing. So I call it both, but it all comes from the candlestick signals. What does a gap up kind of a hangman type chart do? Well, you have to have caution because it could very well pull back. There's no guarantee of that, but the odds are that we pull back. We come down here and put a little doji here. What does a doji mean? Doji is a sign of indecision, right through here. Sign of indecision. Indecision of what? Well, if we're moving down and you get the indecision here, then that indecision is, do I still really want to go down? Let's talk about this. Buyers and sellers get together and talk about it. And just the opposite if we're going up. If we're going up and you put a doji in there like this, then you've got to be cautious, because what that is indecision. Buyers and sellers are going to chat about it, and it could go this way. So we always want to be a little bit cautious when that doji comes in there. So right now, because of this chart pattern, I've got to be a little bit bullish. I have to be that. But I also have to recognize that we have resistance here. Downtrend line. Good morning, Julie. Good morning, Gregor. And Joe, a nice quotes there, Joe. Really nice. So we have this downtrend that we have to deal with. We also have all this resistance through here, and there's a lot of it. So this is why I think we just don't have a big edge right here. So we need to be a little bit careful with that. Okay, just some thoughts that I had this weekend a little bit. All right, let's take a look at some charts here. Yeah, so BITO, I'm already long BITO from last week, and it's looking pretty good here. I like that. Truth be told, I wish it would have pulled back a little bit. If it would have pulled back a little bit, then it might have given me a reason to add to it. I'm not necessarily interested in adding to it on the way up here. Now, if it was to do this, say we move up today and we close up. Well, let's say we close at the 50 today. Okay, that might be a stretch. Who knows? But it could happen. So we close at the 50 somewhere in there like that. So then, what I would like to see is a little bit of a pullback, and then maybe I can set up an add to for that next swing up. And this is what it would look like. So we go from a low, let's make it this color. There we go. Low to a high to a higher low, and then I'll be looking for that next rally up here like that. Of course, if it starts breaking down, I'm going to be pretty quick on taking some profits, because stock trading is about making money, right? And controlling your losses. Don't forget that. Controlling losses is huge. You know, funny thing about that is I truly think that everybody has a good handle on making money and looking at charts. I really do. It's not hard. It really isn't. And I think most people have a terrific plan. Where they get sideways is those losses and what it does to you. It just deflates your ego, and it shouldn't. A loss can actually be the best trade of the day if it's a good loss. And yes, there are good losses. Like, we'll just say $100 loss versus waiting 12 days when you finally take the $900 loss, something like that. Believe me, the $100 loss would have been the best trade of the day. Okay, let's take a look at Hood. Hood is a popular one. That's moving up really nice here. Massive bullish engulf. Massive bullish engulf in here a few days ago. I want to come back and talk about this hammer a little bit, though. The thing about hammers, what hammers do is they hammer out something, whatever it can be. You want it to hammer out a bottom, hammer sheet metal, whatever you want to do. But it takes more than one whack of the hammer to get it done. Hammers is one of those candlesticks that it just takes more of it. So what I mean by that is, when we see a hammer, when we've been in a downtrend and you see a hammer in here, then what we want to look for is not necessarily, bullish right away. It happens, but really what happens most of the time is you get this noise. And what it's doing is it's still hammering out the bottom. I know this is not a hammer. I know that is not. I know that is not. But a hammer starts the process. It hammers. Okay, you never know when that bottom is set in place and when the bulls take over. You never know. You can't guess when it's going to happen. You have to watch the candlesticks. So hammer. Well, I think that was the day. I think we can say that was the day right there. And this is not the candle we want to necessarily be buying. What we want to look at is the follow through of that candle. So here we had follow through, certainly could have been traded, certainly could have gotten into it. And now that we've moved sideways, I think we're setting up for the next move up. To me, this is the trade. To me, this is the best trade there is. I'm not smart enough to catch these. I can tell you guys that right now. I'm not smart enough to do that. Good luck to those that try to do it. Yeah, I've tried, and, well, what I like is get that move in there. There's always, always going to be profit taking. Under 110% of the charts you look at, this will happen every single time. Now, what may not happen is one candle, two candle, three candle pullback. It could go one candle, two candle, three candle, four candle, five candle, six candle, seven candle. It can certainly do that. One potato, two potato, something like that. But any chart you look at, when you get this run, get a run, you're going to see profit taking. When the profit taking occurs, that's opportunity for traders like me. So here's the opportunity. Here it's setting up again. To me, it looks like it's trying to attack that 50-day period moving average. From the bottom here, we should probably adjust this a little bit because we're not down there anymore. So from let's go midway of Friday's candle. You can see here that's a 25.5% up to where I think $18 where we head to. BBBY, I better pick this up. I'm going to be in trouble time-wise. BBBY might be setting up again. We've got a nice double bottom here. Low to a high, to a higher low, to a higher high, to a higher low. You can see how that trend line was created with those higher highs and higher lows right there. Target-wise, I'm looking at 18 and change, 20, 21 and change, 24 and change up here. Nice little J-hook continuation chart in the making here. VMW is a nice chart. If you're looking for a nice rounded bottom chart, this one would fit the bill for you right there. Very nice rounded bottom. Look how it turned green here. Trendicator was down. Trendicator is now up. Watch for those little pullbacks. Here we've, excuse me, here we've pulled back a bit. We rallied up, and see how sideways we are right here? 1, 2, 3, I'll say 4 or 5 candles. Yeah, we can do that. See how we popped up right here? Actually, a little J-hook here. Let's do this. Let's do this. So here we are up. We are down. See that J-hook take off right there? When we break out of the top to the left side of the J-hook right here, when we break out, this is a sign that the bulls are still there, and then the idea is that it's still going to go up. I take a look at this chart right now, and what I see is tight little setup here, and the bulls are trying to break it out right now, pre-market this morning here. I'm looking at 138 and change, 149 and change. McDonald's is setting up nice. McDonald's has gone from a Trendicator red to Trendicator green right here. It's also gone from these lows, broke out of the 50 period moving average with a high, and we've had a pullback right to the Trendicator and the T line here, and now what we're looking for is that continuation. Now, I don't want anyone thinking that, continuation. The chart could actually move sideways for days, okay? Just because we look at a chart like this, just because we're focusing it from the watch list, doesn't mean that bada boom, bada bang, this chart's going to rip everybody's face off and just sell tons of burgers today. That's not what this is. We're looking at charts that are set up, and the setup can last for several days before it actually works, okay? Or fails. Not all setups work. IBM. I'm really curious to see what that thing does today. Nice cup and handle, okay? Very nice cup and handle. So here we are, cup, nice little handle. I'm not too interested in buying it, which there wouldn't be a problem with that. Just keep your stop in there. I just want it to break out, that's all. So really what I'm looking for is a breakout here. I don't care much about that resistance. You show me you can break out and hold here, then I'll look for 144 and 150 up here. Okay, everybody, be careful today. I do believe that we're still in a very volatile market. There's nothing wrong with volatility if you can handle it. If you find yourself you can't pick out a trade, you can't trade a trade, too many losses in a row, don't just keep throwing money out there. It could be it's just not your market, and it's okay. Every day is a little bit different, and if it's not your market today, it certainly could be your market tomorrow. More times than not, you just have to take a 1-2 day breather. The worst thing you want to do is just keep throwing good money. Bad money after good money, I guess. Good money after bad. Bad after good, something like that. All right, I'll see everybody here when the market opens up. You guys take care. Trade well today, and thanks for being here. Appreciate it.